Hi there, welcome to Crypto Wyckoff Check speedrun session for these 26 crypto projects around AI real-world assets as well as payments. I'll go through very quickly for these 26 projects around their Wyckoff stages, their key price levels, as well as any breakout timing in the daily time frame. I am not a financial advisor. These videos are for education and discussion purpose with you only. So always consult your licensed financial advisor if you're seeking financial advices. So let's get into the very first one, the weekly chart of BDX. So DEXE currently still within the accumulation cycle. So one thing I forgot to mention is that for the ones that I have marked in red circles, they are still in distribution cycle. The orange ones are in early accumulation. The yellow ones are in mid-late stage accumulation. So that's how they are categorized. So we'll start off with the distribution ones, and we can clearly see that DEXE is still trying, or actually heading towards the upwards of the distribution, setting an other top after the previous peaks. So the very first one happened somewhere around the end of last year. The second one happened just in September. And now we're seeing the third one. So this we can take away because, as I said, if it comes up for a second test, there's a chance for an upwards of the distribution if there's sufficient support, and obviously there has been sufficient volume carrying this run upwards. However, last week we see candle wick from the top rejected from the light blue key level of 10 cents 30. So that's the first warning sign, I would say, that the demand has been depleted. So much like what happened during September, these long wicks from the top actually signals that the run may be over. All right, this one over here kind of is like an early signal already, but subsequently money's still trying to get in. Like this kind of late FOMO situation is getting riskier and riskier. All right, so that's the big picture. If we get to the daily chart, we'll be able to see more. So those dates from the chart, they are actually for this one. So I'll tidy these up right now. So we only see them in this interval and below. For the rest, I will wait till a later time to fix them, just to save your time. So what this is showing essentially is that if the price continues to trade, looking at these candlesticks over the past 3 days, right? After the rejection on Sunday, basically yesterday and today are pretty much undecided. It's a fair fight, or like an equal fight, equal power between bulls and the bears. Consistent volume, however, long wicks from both sides. So there are quite a bit of people selling as well as quite a bit of people buying. That's why I said it's kind of risky now, because if it continues to trade sideways, towards the right-hand side, eventually you'll get to the tip of this triangle, and that points to somewhere around late May. So still far from where we are now. However, if, like I said, it really drops back from the upwards of the distribution, remember, it's common to see automatic reaction. So this time for buying climax we had one, for the upwards we had one as well. So if it really retraces from where it hit and come back down to the yellow key level or lower, all right, like this back in September, October, if it comes down here, that points to somewhere around mid-March that a trend change confirmation would come. So it either breaks the green and continues with the uptrend. So this is the uptrend air hockey table or channel box. Okay, then If it doesn't, it's going to confirm that it falls outside this uptrend that started way back in here, June, July time. Right, so even worse, if it drops below the yellow key level of 0.087, it's going to come sooner, around the end of January. Okay, so that's BioDex. At a risky level now, trying to challenge the previous peak, obviously, back in the early days in 2020. But be careful of these kind of start. That's when it first started. A lot of projects initiate that kind of behavior. What comes after, all right, may have already set the peak for subsequent time, unless the project gets a lot of adoption and it continues to mature, the community continues to grow, then that's a different story. But nothing much change. If that's the case, then it's getting close to what happened back in mid 2022, where it peaked. It's not too far from that wick over there. That's about 20%. Even if it comes up, these last leg is going to be very risky, unless you see some reasons that I haven't talked about. If you know the rationale behind, feel free to drop in the comment. Next, we get to TEL. So TEL coin over here, of course, still in distribution like BioDex. What it's heading towards is potentially another sign of weakness. All right, so it had happened back in October. Now it's coming back to this light blue key level of 0.0033. Next, if it really comes back down to accumulation, that's the preliminary support stage where people start to panic sell and whales started slowly collecting their stock. Okay. Previously, we used this yellow line, tracking whether there's an uptrend. If the price stays within the uptrend, then the chance of it going back up to show us a second test or an upthrust will be getting higher. But unfortunately, it confirmed that it has broken. It's going to break below this, so we can remove this line. Uptrend doesn't exist anymore. And I've drawn this box to indicate the new downtrend that's been potentially formed since like mid-November. All right, currently it's trading at the weaker half of the downtrend, and these states indicate potential trend change. Assuming the price trades towards the stronger side of the box, then we can closely observe those dates and see whether that's the case. Whether a downtrend is to be over, and like it did over here, it started another new trend, maybe uptrend or sideways. Okay, that's Telcoin. Next, Stellar. Stellar, similar to Telcoin, just that last week we already marked this sign of weakness, meaning demand pretty much depleted at this point. Just not to the point of panic selling yet. Of course, sometimes the accumulation can start higher than the previous cycle, so it doesn't necessarily have to end up as low as the previous cycle. So this is something we are closely observing. All right, if it bounces up from the orange key level, it already tested it last week, the orange key level of 20 cents. If it bounces up to challenge the yellow key level of 0.25 or even the ceiling of the long-term playground swing, this white line over there, that would form an LPSY, but that's not a must. So this, while I call this a sign of weakness, if it doesn't turn into like a rebound and go straight into accumulation, we can take this away. Daily. Trading continue along the weaker side of the downtrend. Okay, you see these light blue lines, those are the downtrend boundaries. And if Stellar managed to trade towards the stronger side of the channel, then those dates are still within the line of sight. So 20th of January, if the price climbs back and trade along this level or even higher, okay? Like I said, if there is an LPSY, that may be able to happen. If it doesn't, just slightly upwards and trade towards this triangle, that's leading towards near the end of February. If it continues to stay range bound within the current two key levels of 0.20 and 0.245, the orange and the yellow, that's pointing towards the end of March. However, October 10th did challenge the lower level at around 16 cents 80. So if the price once again comes down to this level, that's going to get to very close to near the end of April. Would it go even further to the red key level of 0.135? Certainly, that's possible. If we look at 2025, April, it tested the orange, but it didn't go as low as the red, not even October 10th. However, the 2022 to 2024 mega accumulation period, that's I call it, or you can call it the hibernation or ice age of crypto, that went even lower. Okay, if capital continues to flow outside of crypto, all these would become possible. So that's why I said if the price continues to travel along the downtrend without any indication moving towards the stronger side of the trend, the likelihood of it seeking the 2002-2004 period low accumulation is going to get more realistic. Okay, that's Stellar. Next is DEXE. So we are moving into the early accumulation projects. So here we're starting to see early accumulation. So some of them, like DEXE, is transiting from the panic sell period into the panic over period. There would still be selling, but you see the price spread is getting, meaning the candlestick body is getting shorter than before. So eventually we'll see the selling climax play out, and what's next would be the automatic rally. So there would be rebound, not sure how high that would be, and then subsequent test. So that rebound may not lead to an immediate uptrend. Okay, be very careful. Daily. So you see all those dates. Currently the price is trading on the stronger side. So imagine there's like a center line. It's a very narrow box, so I haven't drawn it to avoid it being too busy, but that's where it is trading right now. The line doesn't have to be like cutting the box in half. It should land on where most of the candlesticks head or tails or those wicks tip landed. Alright, so if it continues to trade along this line without going all the way to this line that October 10th indicated, there are a bunch of days, although these levels, these yellow dashed lines aren't strong, so you see it kept falling through one after the other. So not until this white line we see a stronger support, it's likely that it's going to continue with this. And these dates, December 23rd, it already confirmed that it's not going to break out or do a trend change. December 28th, if it continues to do things like this, it's not going to continue. This is very indicative. That day, the bulls tried to break above this dual resistance, both the red key level of around $3.7 as well as the ceiling of the downtrend. The result, it got heavily rejected. You see that volume bar, crazy volume bar over there. That's a clear sign that, no way that we're heading to that way yet. Okay, it got heavily hammered. So let's expect, for these dates, 28, the beginning of next year, 1st and the 4th, and the 7th, those are the days to observe. However, I would say the 7th would be more realistic as the first potential breakout. Then we'll have to head towards near the end of January, where that level was tested by October 10th. There's no past of DEXE reaching that level. So after that, that's uncharted area. We only have the volume and trading actions after that to observe whether a bottom is forming and a potential trend change is near. Alright, that's DEXE. And then next we move to injective protocol, INJ. INJ here, similarly, getting into the selling climax, the panic over period, and that's what comes after the AR automatic rally. In terms of daily chart, it's trading on the stronger side of the downtrend, and heading towards the beginning of next year or the last few days of this year, there's a chance that it confirms that this downtrend is over, but that's not a must. All right, because if we look at this volume bar of this particular day, this white candle, the white volume isn't very high. Subsequently, the volume has been very low as well. It's there's basically no decisive action, because also on Thursday we see this long wick and a pretty high volume over the almost double the average of the past 2 weeks. All right, so 1st of Jan, it may hit the ceiling of this box and then got rejected and bounced towards the yellow dashed line. That triangle points to 24th of Jan. That's the second chance where it would confirm a trend change, and that's also close to the level where October 10th tested. The reason why it's lower is because if we look to the past, that's where the ceiling of the accumulation back in 2002 into 2003, that's where roughly the trading range top was, and also this backup from the initial climb landed. So that's why I took this instead of October 10th as the level. Okay, that points to Jan 24th, and eventually the white line is where near the bottom of that accumulation is. So that breakout confirmation, if the price really drops through those and comes to find support at the white, that points to the beginning of Feb. That's injective. Next, quant. So quant over here, we see a sideways trend, and in terms of the bigger picture, I put in a question asking, is it actually accumulating, or is it reaccumulating, or is it actually going back into the preliminary support stage of the accumulation cycle? I should do this for reaccumulation, because if it reaccumulates, there's a chance that it does this sideways trading and eventually goes up to show another second test or even an upthrust, okay, meaning higher than the buying climax. That's a possibility. Okay, we have to see how it further develops. However, this week's starting to decline after last week's crossover here. So there were 3 occasions where we see long wicks from the bottom. Okay, we see these long wicks from the bottom, meaning there has been pretty strong support from the orange key level of $70. That's where the last sign of weakness rebounded back into the second test during April all the way into late July. So that's why I guess some people got in and bought the dip. Just that the risk is that even quant is probably heading towards an accumulation. What goes after this panic sell whales buy period, right? The panic over stage, selling climax, and eventually the cycle trading range top, automatic rally. So people really flush in to buy something, just to face subsequent tests. Daily chart is still trading at the weaker half of this sideways trend. All right, not particularly good or bad. The volume has been staying lower than the previous probably 2 months. Okay, it's not a bad sign. Okay, if it really stabilizes within this range, it may well be a selling climax taking place. Okay, like I mentioned earlier when I talked about one of the projects, it doesn't have to end up at the same low level like it did back in 2024, where it landed around the 60.5 red key level. Of course, at one point, after the sign of strength when the spring happened, it landed even lower. And after the selling climax, or during the selling climax, it actually tested the white level, the bottom of the long-term playground zone around $50. It doesn't have to happen the same way. It's a possibility. So when we see the selling climax comes, expect that subsequent tests can go way deeper. So if it lands around 70 and ended up showing us a test towards that white line level, that's another almost 30% drop. Okay, so that's the risky part of crypto. You never know. You think it's over, it actually is not. Look at what happened over here in June 2022. That tested lower than the white line, but the reason I draw the white line over here, for one, 2024 tested this level. For two, these two candles closes and open around this level. So I'm disregarding this wick that quickly reclimbed to that level. Daily chart. Not much particular indicative at the moment, so let's move on to RSR. RSR still transiting into the selling climax, the panic over stage. Volume has been coming down consecutively, so it's not too bad, just that again you see weeks after weeks these kind of long wicks from the top. That's why last week and this week we're ending up below the red key level of 0.003. The selling pressure was still there above the red line, and this wick from October 10th indicated that it's not a surprise for the white line to be tested. That's around 0.0017. Not only October 10th tested it, during summer all the way into autumn 2023, that level was tested as well. Daily chart trading on the stronger half of the channel. January 11th is the date that a potential trend change confirmation would come. However, like I said, if capital continues to flow outside of crypto, this, whatever happened back in 2023, may not be the lowest point for 2025 or 26. So that's the alarming part. All right. Of course, we hope it finished at where October 10th tested, but it's not a certainty. Next, Maple Finance, Syrup. For Syrup, it looks to me it has shown an automatic rally. All right, from the selling climax to where it ended last week and where we started this week, there's still over 5 days for this week's candle to develop. So expect more tests to come afterwards. And in terms of daily chart, it basically got rejected from both the ceiling of the downtrend air hockey table as well as the purple key level of around 36 cents. Okay, so that's where it's heading the second consecutive day, flowing below the blue key level of around 33 cents. And if it successfully finds support above the light blue key level of around 27 cents, like what it did during this particular period, okay, between the beginning of this month to the 18th, so it continues to stay above this line, then eventually we'll get into, when we get closer into the middle of Jan, that's probably the first occasion we'll get a confirmation of trend change, meaning the price is finally getting outside of this downtrend and trading sideways or upwards, or developing into a new downtrend eventually, if the drop is not over yet. Of course, if it drops lower, like what it did earlier in November 31st, December 1st, below the light blue key level, we have to wait till near the end of Jan to see a potential trend change. Next, TRAC. So original trail, again, it's even earlier than the others. It's probably still within the panic sell whales buy period. The price spread was still pretty high. This week, we still wait and see what's going to happen in the next 5 days. And in the daily chart, it's currently trading on the weaker half of the channel. So we will have to wait till like the end of the first quarter for things to happen if it continues to trade low, moving towards the stronger side. Of course, this, when I mention this, I am assuming that a selling climax has yet to appear. However, if it, do a trick that sometimes we see in preliminary support stage, the PS stage, sometimes it can do something like that, like a horizontal trading period. Alright, yeah, something similar to this, but even crazier. Alright, look at what happened right there. Okay, if it does that and it goes back to challenge right key level 0.52 or somewhere around that level, this is where it's going. So it can go from there and trade sideways before it starts a new downtrend. Alright, but I am thinking it's probably going to not last that long till mid-March. Okay, I'm looking at this cross over here. So let's see what's going to happen to TRAC. It's more likely that it comes down to the yellow key level where it tested multiple times that 30 cents level. Multiple times it tested it this year. Of course, it can go lower. Look at what happened back in 2002 to 2004 cycle. So the downtrend, breaking outside of it, is key. Next, XDC. XDC. Okay, it looks to me the selling climax may be there already. Just that last week was pretty confusing with a high volume and long wick from the top. So even though we are seeing a white candle as of now, be careful that this may not be over. It seems like it is there, but let's keep an eye on it. Don't make the call so early. Taking reference of what happened in October, current level 0.045, the green key level, may not be able to hold. There are two other key levels, obviously, before we get to the October 10th level. The yellow one 0.037, the orange 0.033. Those two are very key. Both the 2024 late summer, August time accumulation, as well as 2002 crypto ice age, both tested the red key level and actually even lower at the white line. So the white line is at around 0.022. Alright. Daily chart, trading along stronger side of the channel. The very first indication of trend change may come at around mid-Jan. Of course, it can come earlier, just that this is where the channel crosses the key level. The next one would be into mid-Feb. So that's XDC. And then we have ZBCN. ZBCN looking at this over here, it's still trying to stay within the distribution cycle. However, it's also quite a bit of selling from the top. The bears are trying to push the price below this light blue key level of 0.0027, pushing it back into the accumulation cycle. So that was the assumption, because it's a rather young history that we have over here. So I'm making a big assumption that this was an accumulation back in June, all the way into June 2024, all the way into April this year. All right, it's a very different period compared to a lot of other altcoin projects. So that's the caveat I want to let you know. It's a big assumption that that was an accumulation. And given that limited history, if it really comes down for a new accumulation, there's a chance that it goes lower than all these lows. Okay, so that's the risk for ZBAC. In terms of daily chart, it's trading along the stronger half. If it does come up, that's pointing towards 18th of Jan. The next is 11th Feb, and eventually 11th of March. Those three are the potential trend change confirmation dates. Prior to that, it can happen sooner, definitely. But those are the dates that we hope to see, especially if we don't want it to drop below the green key level of 0.0021. But already mentioned, the other three levels are completely possible, seeing what happened back in 2024. Next, the mid-late stage accumulation. Very first one, Algo. Algo continue deep into the test. After the selling climax, second test, as well as a sign of strength. So whether or not this is just a typical test or whether this is a spring, we will know once it starts to climb. Alright, because it may end up just another sign of strength, or it can shoot all the way to a new distribution cycle. Alright, it only depends on what the capital has decided to do. Last time, after two signs of strength, one spring, started the distribution. Daily chart, trading on the stronger half. These dash lines aren't really strong reference levels, but they did provide certain support. Alright, volume itself yesterday was pretty confusing, with quite a bit of selling from the top, the long wick from the top. So be really careful. This yellow dash line wouldn't hold. If it does, however, it is getting towards 13th of Jan that we may see a potential trend change confirmation. Next would be January 21st, which is a stronger reference, and also another strong reference is the 1st of Feb. Okay, if we look to the left, we see what happened back in August 2024. It tested lower than the red key level, likewise for the 2023 accumulation cycle. So after Algo, we've got AMP. So AMP over here, again deep into the tests, similar to Algo, just that it's even deeper. It's getting very close to the bottom of the long-term playground zone, where again October 2023 tested. Certainly that's a level where potentially quite some people are willing to jump in. But like I said, capital is flowing out this time, very different from that particular period. Actually, even more different than before the first crypto was born. Okay, it's somewhere around that period. That's making it very tricky for crypto now. It may define the future of crypto, who's going to stay and who's going to get eliminated. So, almost forgotten. Let's take a look at the daily chart. So, somewhere along the center line, if it comes back, before 21st of Jan towards this triangle, meaning breaking above the red key level. But the previous few days doesn't look like it wants to go that way with that wick from the top. Okay, here, if it, like I said, continue to be suppressed under the red key level of 0.002 and stays above the 0.0015, however, that's pointing towards near the end of Feb that we may get a trend change confirmation. That AMP may have gotten outside of this downtrend that started back in July this year. After that, we have our wave, similar test period, and it has gone even lower than the long-term playground zone, meaning it hasn't gone that low even during the Ice Age period in 2002-2003. October 10th hinted that it can go lower than that level. Alright? We're just entering that zone now. And from this point to where October 10th tested, it's a 60% drop. Okay? Yeah, pretty scary. So, if we go to the daily chart, if it continues with this downtrend, positive view, if it climbs back above the white line, that triangle points towards the 21st of January. Alright? However, if it does continue with this downtrend, we have to probably wait till mid-May to get a confirmation. Not that it's a must, like I said. A wave of capital would come and save everybody. But, that's a big but, okay. It may not come until the storm is over. Okay, a storm is around and people smells it. People can smell it, just that, they don't know when it's gonna break. Okay, here we are with Casper. Casper continuing with the diamond hands, paper hands test. And this week we started with something slightly encouraging. It tried to climb above the white line, the bottom of the long-term playground zone. That's where the price is around 0.006. That's where the selling climax tested, back in early November. Casper, again, has a brief history. During the 2002-2003, fortunately, it was already there, and the accumulation was way higher than now. So, as I said before, a project can definitely accumulate at a lower level. It had some mini distribution, but then whether it's because it lost support from wider audience, it started into a very deep decline beyond the yellow key level. That was the bottom of the previous accumulation cycle back in the Ice Age period of 2002-2003. That's 0.024. Okay, so we hope to see a sign of strength to appear, or if this is a spring instead of an ordinary test, then the next few legs upward will be very key, because that's probably going to go back to other distribution cycles, even if they are not as high as where Casper started. Daily chart. What we're seeing is trading along the center line of the downtrend. It has been consistently staying on the stronger side, but the past week, we see it dip deeper into the weaker side of the channel. So when the bulls push the price up, trying to get into this triangle, breaking outside of the downtrend, it get heavily rejected. You see this long wick from the ceiling of the box. Alright? Not that it can't try again in the next 2-3 days, because this date is pointing towards 27th of December. Certainly it can try. But, subsequently, there's not much reference for Casper. So we continue to measure these kind of interim bottoms and see whether that will become the new support level, as a launch pad for at least a rebound. Next, FET, Artificial Supply Intelligence Alliance. Again, very deep test, seemingly finding some kind of breathing zone above the Reiki level of 0.19. Okay, last week we see a little bit of wick from the bottom. This week we started with a little bit of white, just that we want to see a tall volume bar. Okay, but not like those two back in November with a long wick from the top. Okay, that's not what we want to see. Okay, long white bar, long white candle without the long wick at the top. That's what we want. Okay, it's not uncommon, unfortunately, that people are trying to sell even when it's trying to climb back up. And then next is diving into the daily chart. Seemingly, trying to find support both from the red key level as well as the bottom of this sideways trend. So the 0.19 level is very key. If it breaks, it's going to go test all the way to somewhere between 10 cent to 6 cent 50. Of course, there's intermediate level at around 13-14 cents. I'm referring to this range over here, and then the top of the trading range, and then eventually the very bottom of the trading range. So if it does come down, even though I say is in a horizontal trend, it does have a mini downtrend that's evolving. Not this, this. Yeah, so that's the downtrend I'm talking about. And if it does come down, let's get this tighter figure. That is pointing towards the 1st of Jan. Alright, so let's put a box over here. That's 1st of Jan we are talking about. Okay, so we will see whether this is going to turn into a downtrend, or is it that the sideways trend is going to continue by the end of this year or the very first day of next year. So that's for FET. GLM. GLM here, a little bit better. At least it's not continuing seeking the bottom. Alright, it found support at the orange key level, even though it's deeper than the selling climax. That's the 17 cents level. At one point it tested lower, but it never reached the red key level of 0.12. So that's a better sign for GLM. And when we get to the daily chart, we see it's seemingly falling outside of the uptrend. So I'm going to adjust the box a little, because last time we did say somewhere before December 27th, it's going to confirm whether the uptrend is going to continue. And on Wednesday, it dropped quite a bit just to find support along the center line of the bigger downtrend. Alright, so it may well be the downtrend that's going to continue, but we'll give it a benefit of doubt by adjusting this uptrend box. And hopefully we'll see what's gonna happen when we get closer to the indicated date by where the lines crosses. So after the adjustment, this is no longer December 27th. This now points to the 16th of Jan. Okay, 16th Jan. And then, of course, further up, it's pointing towards somewhere near end of Feb, around 23rd, 24th. That hasn't changed. Okay, assuming it gets into this wedge over here. Whether or not it's the triangle above or the triangle below, it doesn't matter. When the price continues to trade towards this wedge, it's going to confirm us whether it's going to break outside of this downtrend, or is it going to get rejected and this uptrend is officially over. So those two dates are key, somewhere in mid-Jan and somewhere near end Feb. Next, we've got graph, the GRT. GRT, very, very deep test. Look at what's happening here. We may be seeing some sort of flattening right now. This seems to be forming a line, but we're just the second week in, so don't be like so certain yet, because when it got rejected from the white line, you see this white, tiny white candle with a long wick from the top, right? That rejection, and then subsequently 2 weeks ago, is still telling us that the selling pressure is there. And when we get to the daily charts, this downtrend clearly shows the price is still trading along the weaker half of the channel. There's no point in history of the graph that has reached this level, so we can only rely on the latest price actions to confirm whether it may be edging outside of the trend. So let's keep this line over here, and we can continue to observe if the price continues to trade sideways with lower volume bars for the red candles and taller volume bars for the white, which yesterday's one wasn't indicative. It's basically the bulls and the bears reach a point where they say, let's take a rest at this point. We've got almost equal length of wicks, top and bottom. This points towards somewhere near early February, assuming the price continues to trade along and stays above this white dash line. But like I said, this is just a very short-term reference and it may not hold for very long. Next, chain link. So link itself, again going through a downtrend but trading on the stronger side. When we get to the weekly chart, we get to see it has actually passed the automatic rally period, coming back down for more tests. So I did mention that this yellow dash line that's providing support of these higher lows since the spring back in summer 2023 is still in effect. So even this week, we have just started for a day and 20, not even 20 hours, 18 hours. We're still seeing it's trying to stay above this line. So finger crossed that this is going to hold, and link isn't going to go for a very deep test. But we all know, we all see what happened on October 10th, and that's white dash line over here is a level that link can definitely come down and test. Even back in August 2024, it came down to this level. We don't have to go that far to the 2002-2003 Ice Age period. So daily chart. Currently, after the move at the beginning of this month, it eventually travels to the stronger side of the box and continue to trade over there. Just that, last Monday it broke below the red key level of around $13.10, and there are certainly some intermediate levels over here, these yellow dash lines. that points towards mid-Jan and later in Jan. This December 29th is a positive scenario, very positive scenario, that the price found support and then break above the red line again and eventually confirm trend change by that date. However, if it doesn't, like I said, if it comes down to the October 10th level or that 2024 August level, we probably have to wait till February before a trend change confirmation comes in. Next we have LPT. So LPT, very deep test below the selling climax back in April this year. Look at that long wick from the bottom, for 2 consecutive weeks. Those are the ones that we want to see. This is the level not only April this year tested, June 2023, it was there as well. So October 10th just indicated that the LPT may get worse than that, and it does. It is now heading towards that level. That level is around $2.14. So if we get to the daily chart, we clearly see 2 days ago it gets clear rejection. Both the ceiling of the downtrend, sorry, I kept pressing the wrong button. Here, the ceiling of the downtrend, this blue line, as well as this white dash line. So this not only was the earlier support during this period in November all the way into early mid-December, now that turns into resistance. So that's a dual resistance at that point. It also was that support back in April. Okay, if we go further to the left, this white dash line was supposed to be something that I would say a support level protecting the price before the white solid line, but now both has broken, and obviously I can understand the buying when the price got below the white solid line because of what happened in the past, and it's certainly now that it's confirming October 10th is the clearer indication. Okay, and that's why I said the 2.14 or 15 line is very key. So 2 dates pointing to the 1st of Jan or the 21st of Jan, 2 potential breakout or trend change confirmation dates. When we get closer to that, when we get into 2026, we can take a closer look. Next we've got near dipping very deep. Also, after it tested the October 10th level, it rebounded. Even though it's slightly, the volume bar is still small. We just have started this week, so we still have time to wait. The volume over the past 4 weeks, in the previous 4 weeks, was relatively low. So that's a relieving sign that it's not dropping crazily deep. Or like, dropping with very long red candles, not like that. So, and it also seems to me that 3 days ago or 4 days ago on Friday, it has confirmed that it's moving outside of the trend. I can still make a little bit of adjustment. We did talk about 20th, so sometime around or before 20th, it's going to break, it's going to confirm. It did. Just that if we want to be more conservative, you see these bottom isn't really touching the bottom of the trend. If we adjust this by a little, alright, instead of the 20th, it's actually pointing towards today, tomorrow. Okay, somewhere around the silent night. That it should, if the trend is confirmed, it should continue to go outside of the box. And by that point, because we are already touching this bottom, we're not going to adjust this box any further. Okay, so just to play safe, while we get this confirmation on the 20th, just to give it one more chance to prove it, Because if this trend is really confirmed, it should continue to do its sideways movement. Alright, so that's for near. Hopefully it has finally, come to the end of the paper hands, diamond hands shakeout test. And then for ONDO obviously is still continuing. The volume is getting slightly higher and higher after the rejection 2 weeks ago. And obviously we hope to see the sign of strength coming back for ONDO. Daily chart is trading along the stronger side or stronger half of the air hockey table. Yeah, it may get rebound from or rejection from the ceiling of the channel, coming back to the center line like what it did earlier. The dates, the indicative dates by these weaker support levels, you see how these levels was broken, right? So when they were broken, we're getting into the next two not so strong level. The white one at around 19 cents is the one that's way stronger because of this bottom over here back in 2024 January, February time. However, like I said, with history less than 2 years, or even looking at a lot of charts, when you see we have to refer back to 2002, 2003, even 3 years may not be enough. So let's focus on this. After Jan 9th and Jan 21st, it's pointing to somewhere in early February. But when we get into January, we can update that and see where it is. Okay, that seems to be a more solid one to me. Okay, so this one, 2nd of Feb. Alright, now we have render. For render, okay, deep test, finding support J right now, and actually the close of last week, at around 1.22, the red key level. This test, however, may not be over yet because October 10th came to the bottom of the long-term playground zone where 2002-2003 accumulation period bottomed at. So in terms of daily, we continue to see the trade along the center line of the channel. Just that you see all these intermediate levels, these white dashed lines, did not provide a support at all. Okay, that was the period not far ago in 2023. Obviously, it means nothing, and money seems to be continuing flowing out of render. So we have to rely on this white line at around $4.25. Alright, not even, it's $4, not $4, sorry, 40 cents. Okay, 40 cents level. October 10th came close enough. So let's make it more conservative and treat the 40 cents is the next more solid support. If the price continues to trade downwards, and just to find support along there and start to sideways, that points to early March. THETA, again, a long downtrend. Last week, a very big candlestick with tall volume bar. So it's definitely the bears driving it. And the 0.195 red key level is the level that we are looking at right now, because October 10th clearly ended at that level, but 2002-2003 ended at the white. That's around 4 cents 20 roughly. So in terms of trend change confirmation potential, of course we can give it a more positive guess. So that would happen around the end or near the end of January. Next, if the price successfully climbs back to above the orange key level, the 32 cent level roughly, that points to 26th of February. However, if it does come down to test the red key level of 20 cents, where the October 10th tested, that needs to get to near the end of the first quarter of 2026 before we see a breakout confirmation. And then we've got ULTIMA. We're getting very close to the end of the speed run. Here, we have seen the selling climax, the automatic rally that challenge almost the blue key level of 9445. And then we have yet to see a sign of strength. That's the advancement with volume. We haven't seen any. These previous candlesticks during late November, early December, they are pretty long, but the volume bars aren't. Okay, so that second test, we have seen it. It's lower than the selling climax, and definitely ULTIMA is going through this paper hands, diamond hands testing period. And while it's currently above the orange key level of roughly 5250 or 5257, it has to stay there, because otherwise by somewhere around December 27th, it's going to confirm whether it's going to drop outside of this uptrend. All right, this uptrend hasn't started very long. It started at the end of November. We're not even 1 month in. The bigger downtrend, however, is this. It's not very steep, but it does look like a downtrend to me. Alright, it's kind of gradual, but it's still trending downwards. Okay, so this uptrend, not sure whether that will lead to a sign of strength, because this volume bar on 29th of November was very encouraging to start with. Okay, just that a week ago we are getting more reds. The volume started to get lower, so it's a bit relieving, but we don't know what's going to happen when we get closer to post-Boxing Day as well as the beginning of the year. Because even if it successfully defend the orange key level and also the bottom edge of the channel, by January 9th, there's another test, whether it's going to break above the yellow key level and continue upwards with the trend. And obviously, next is January 22nd. Of course, there's also one over here. That's very key. Right before it challenged the light blue key level at around the end of Jan. This is the ceiling of the downtrend box that I've just drawn, and it's crossing the bottom of the uptrend. So that's a definitive confirmation time. Whether the uptrend is going to continue and breaking the downtrend once and for all. Finally, we've got virtual. So virtual over here, we're seeing the diamond hands paper hand test continuing, just that it's finding support last week and currently at the red key level of around 67 cents. The second test period, October 10th week, tested the white line. Okay, that's where the selling climax tested as well. That's close to 31 cents. And virtual, we all know it's got a very brief history, and that comes with the risk I already covered earlier. It's not very certain at all. We're making very big assumptions analyzing this, while the profiles of these baby coins aren't confirmed, that it can definitely go lower than the previous period back in November 2024. It's currently trading at a weaker side of the channel, and you see rejection along the center line for a few times already. This test 4 or 5 days ago below the red key level may well be an early signal that it may come to challenge the white line like what it did during October 10th. If it doesn't, however, positive case, quite positive, that it travels back to above the orange key level, and 1st of Jan is when the price is going to confirm whether this downtrend is going to continue. The big picture, however, isn't that like isn't that one-sided. It's late stage and it's just doing subsequent tests. So this seemingly a sign of strength, just that we want to see even better. Alright, this price wasn't high enough. So if it does rebound from this red key level, let's hope it comes with better volume and consecutive days, so it won't come back to challenge what it did during October 10th as well as April 2025. Alright, and of course, if it does, then it's pointing towards somewhere near 8th of February. It can go deeper. October 10th went deeper, so into mid-February. But that's when we want to expect at least it's not going to go even further. Alright, so that's for virtual. And thanks for joining me for today's speedrun sessions. Merry Christmas, stay safe, and if you are in the Northern Hemisphere, stay warm. Southern Hemisphere, stay cool. See you. We'll be back. We'll meet again before the new year. See you then.